On today's World Insight, sweeping U.S. reciprocal tariffs against practically the whole world mostly draw tit-for-tat responses with blowback and consequences. What does it all mean for the future of world trade? How is China forging a path of stability and growth amid the turbulence?
Hello and welcome to World Insight with me, Tian Wei. Major stock indices in Asia and Europe plunged on Monday as U.S. President Donald Trump showed no signs of backing away from his sweeping tariff policy against the world. The decline signals another volatile week ahead as global turbulence escalates. After U.S. President Donald Trump unveiled reciprocal tariffs, China announced a response of 34% tariffs on all goods from the United States starting April the 10th. Let's loop in today's panelists for our discussion. Joining us in Hong Kong, Hong Hao, economist. Also in Shanghai, Joseph Gregory Mahoney, professor of East China Normal University. Gentlemen, welcome to the program. Thank you so much for joining us. Now, Hao, many people are worried about a possible Black Monday. Your take?
I think as we're speaking, the market plunge is still unfolding. I think Hong Kong is down almost 14% since opening this morning. And I think if we close, at this level or slightly lower than this, then it would be one of the worst single-day plunge in history. All right, so even during the Asian financial crisis or 2008 subprime financial crisis, we haven't seen this kind of magnitude within a day.
It's not just the stock market, but also the commodities, even the cryptocurrency market is going down as we speak over the past few days.
Yeah, I think so, because when the market is plunging, liquidity tends to dry up. So when that happens, then correlation between asset classes tend to surge. And then as a result, the share price and also all the other asset price will plunge. So I think at this juncture, I think the only one thing that is surging, the only one indicator that is surging is actually the VIX, the market implied volatility. All right, so at this juncture, even the US dollar index is falling as well, which is quite unusual. So therefore, normally during a crisis, US dollar index will surge. But then for some reason, this time around, we're seeing the US dollar depreciating as well.
So what does that mean? Are we going to see what some call a 1930s kind of moment?
Yeah, I think in the past couple of years, the US dollar has been an asset for most of the people. In the sense that it's a high-yielding currency, right? So, and then also it has been appreciating. So I think as a result, many of the portfolio manager, have a fair chunk of their portfolio in the US dollar, to earn the high yield and also for its safety as well. So it has been a asset that whose price has been fluctuating together with the market. So it has become a risky asset, so to speak. So I think as a result, this time of this market plunge, because everything is being sold off, and also the US dollar credit is somehow being questioned by market consensus, and therefore people are actually avoiding US dollar denominated assets and trying to divert their allocation towards other parts of the world, except at this juncture, it's pretty difficult to find a safe haven.
We see the stock market not only in Asia, but also in Europe now, before a wrap up today, and also earlier in the Middle East as well, U.S. market, the same. So Joseph, as a political scientist, what does that say to you?
Well, I think one of the things that we've seen is as Powell was discussing this tremendous uncertainty and lack of confidence in the capital markets. We've seen the rising protest in the United States. But one of the things that I think is really driving what we're seeing today, which we may ultimately refer to as Black Monday, we don't yet know, is that a number of countries, despite what the White House has said about reaching out, about trying to negotiate some sort of deal, a number of countries have stood strong and have reciprocated. We've seen this certainly with the second largest economy in the world, China, reciprocating with 34% tariffs to match what the U.S. imposed unilaterally against China. But more importantly, the thing that really stands out to me is that we see China, Japan, and the Republic of Korea all saying that they're going to cooperate in their responses. And this is an incredible, it's almost an upside down development when we go back to just the last few years when Washington was heavily pressuring these countries into an anti-China containment strategy. And now we find them working together to try to resist American economic warfare.
So now one crucial question, I would love to hear from both of you, different perspectives, I'm sure. Is this just political theater, what the current administration in Washington is trying to do in order to get others to the negotiation table? According to them, there are more than 50 economies already suggesting they would like to negotiate, but that's according to Washington. But we haven't heard much openly from other economies suggesting the same. While at the same time, we are also hearing different voices as to whether the U.S. is still reliable in terms of being the center of the global trade. So is this political theater, or is this something fundamentally in process for change? Joseph, and how?
And by the way, I was watching, because I have friends who are connected to the government, and I'm not going to name the country in Southeast Asia, and they're really pursuing two strategies right now. One of them is trying to reach out to the U.S. and negotiate something, but at the same time, reaching out to other countries in Southeast Asia to try to coordinate resistance. So everyone is being forced, especially the weaker countries are being forced into trying to pursue all avenues at this moment to try to resist this. But to speak directly to your question about political theater, I think on the one hand, there is the possibility this is political theater in so much as Trump is trying to make a big show and then be able to book some sort of, small but politically fortuitous benefit. But at the same time, there is the U.S. economy is at an inflection point. There is a moment where the previous strategies being used to sustain American hegemony were no longer working. And it's only a matter of time before the U.S. position erodes, given the fact that it's been a house of cards built on dollar supremacy, and a lot of people don't see that as having a long-term future.
Let's look at it.
But there's one more point. There's one final point, which is, it could be that ultimately what he aims to do is to narrow this. He may have a strategic target, and in so much as he may be narrowing towards one or two countries, maybe narrowing against China. Maybe he believes that he can bully others, but ultimately create a broad alignment against, say, the EU or China or someone else. So it could be sort of three different approaches.
Let me just say, if it were political theater, what does that mean? How much space is there? And what might be the consequences, even playing this political theater? Let's just also say it might not be about political theater. Then what does that mean? Let's just do it on two different directions. If it were political theater and political theater only.
Yeah, I think, Trump really believes that the trade terms with the trading partners has been unfair to the U.S. And as a result, the U.S. manufacturing sector has been hollowed out. And therefore, U.S. is paying an excessive price for globalization, and now it's time to pay back. I think, from this angle, he's trying to extract economic rent from his trading partner, and also, he's trying to also, seeing China as one of the major U.S. rivalry at this juncture. So I think as a result, he's playing a very dangerous game, and as you can see, it's a political theater in the sense that he's trying to dramatize the extreme pressure, and so that he can get excessive rent from the opponent. I think China right now is not playing along. Obviously, China has obviously a lot of cards to play. For example, the restrictions on the rare earth exports, and also there could be other non-trade related restrictions on how the U.S. companies can do business in China, et cetera, et cetera. So there are many moving parts here. So I think it's too early to say, what the end game would be. But I think, right now, because there's so many moving parts, then it's very easy to misfire.
Joseph, if it were political theater, what might be the consequences and the price to pay for different parties as sometimes political theater, even if it is a theater, there might be different actions and reactions that eventually would have consequences. If it weren't a political theater, but rather a firm belief and action from the U.S. side, what would that mean? Can you help us to understand it from two very different scenarios?
Well, the main problem is, even if it is theater, and I agree with Hal that he is dramatizing this, but it's also clear that it's not theater in so much as he does have specific strategic objectives, and he's already created some very detrimental consequences that are having repercussions and that will impact people's bottom lines, and we're going to be seeing and assessing that throughout the week. So already it's moved beyond theater. Furthermore, because China is standing firm, because China is cooperating with other countries, because I think we are going to see the U.S. Fighting multiple fronts, not only domestically, not only in terms of countries that have been traditionally allies, but also countries that have been rising, that this has moved past the theater stage and has moved really directly into one in which no one really has confidence in the U.S. anymore. No one has confidence in the dollar. No one has confidence in the U.S. being committed to the multilateral system, to global trade, and so forth and so on. So it's an inflection point. It's a point where we're going into a very new era. We talk about a new era in China all the time, and in many respects it has been. But this is a much more a deeper movement into that now. And I think we're going to see a lot of countries thinking about, okay, what do we do with the World Trade Organization? How can we build other sort of mechanisms that work around the U.S. abdication of responsibility in trade and climate change and other issues? And how can we have more strategic autonomy, but also win-win cooperation with each other?
So how it seems that Joseph is trying to say, not only managing the day-to-day dramatic changes all the economies and countries are looking at, but also to think about the deeper issues and the bigger picture, such as global governance structure since the end of the Second World War.
Yeah, well, I think so.
Is it too early to say so, to think so, or we are already seeing signs of different parties trying to figure out different ways to deal with possibilities?
Yeah, I think we're witnessing the beginning of the end, right? So if things keep going this way, then one shouldn't be too surprised to see, the world order after the Second World War, especially after the Bretton Woods, would come to a collapse. So I think for us, the Chinese regulators have been spending the past couple of years, trying to build up a alternative payment system, for example, right? So before that, one has to rely on the US dollar SWIFT system to settle international payments. But now, there's a new Chinese global pay system that enable people to pay the bills through the Chinese payment system with Chinese yuan. So for China, the cross-border trade has now reached to a level that over 50% of the cross-border trade is being settled in Chinese yuan, right? So it's just a huge improvement. And also in terms of percentage of reserve currency, the Chinese yuan is now well above 5% in the global reserve system.
China and U.S. Trade and economic ties is not as simple as tariff, as we all know. It's a very complex picture. It is very much intertwined, and it is so much, shall I say, mutually incorporated over the past decades. Now, one clue, for example, while we are talking about tariffs, we also see the U.S. side suggesting officially that it is extending another 75 days, quote unquote, in terms of what to do with TikTok. Well, of course, this is just one of those many issues between China and the United States when it comes to this complex economic and trade picture between the two countries. So how should we understand this? On the one hand, a lot of rhetoric going on the tariffs, but on the other hand, many other fronts are also evolving and developing as we speak.
Yeah, I think the real story really is, behind, what's going on in the tariff negotiation theater, and also, what different parties trying to achieve. For example, NATO probably is, trying to be more independent than before, right? So because obviously the US is not going to foot the bill as it used to be. And also China, needs to find, big enough trading partners to replace the US as one of the primary customers. And over the past couple of years, China has been developing Southeast Asian countries as one of the export destination, and also Mexican as one of the manufacturing center, and also Thailand, Vietnam, Cambodia as well. And I think that is one of the reasons why Donald Trump's team trying to impose such hefty tariff on Vietnam and Cambodian exports. So there are there's so many moving parts going on. So I think it's way more than just simple tariff negotiation.
Well, one of the things that I would point out with regard to TikTok is that we saw Trump making this proffer a couple of weeks ago, where if China allowed TikTok to be sold to one of his friendly oligarchs, then he would take that into consideration when it came time to impose tariffs against China. And we saw China standing firm. So I would like to suggest that this desire, or this choice to extend the TikTok another 75 days reflects a failure of the Trump policy. Furthermore, one of the things that we're not talking about today is the fact that Trump's policy towards Ukraine and Russia has not met the success that he promised. And at the same time, we're seeing a return to hostilities in Gaza. So, we had this idea that Trump was going to come in and clean up all these things, but what we're seeing across the board is failure so far. And I think that this heightens the need for this tariff policy to serve as theater, to distract people from all these other issues, because the U.S. isn't simply able to impose its will on anyone.
Interesting. Having said that, though, we also been hearing from the Chinese side. For example, over the weekend, we see the People's Daily, which is the official newspaper coming from China representing the Chinese Communist Party, in an editorial suggesting about China should concentrate on its own things and also to build confidence, in which it talked about the diversification of China's trade. Here are some numbers I noted down and we can share with the rest of the world. 2018, China's export to the United States account about more than 19% of the total exports. However, by the year 2024, it's coming down to 14.7%. Also, over the years, China's exports to the developing and emerging economies, for example, 2018 to the ASEAN countries has been raising from 12.8% to now about 16.4%. To Belt and Road countries and economies, it is from 38.7% to now 47.8%. So it's almost equal to half of the total export. So these numbers certainly are showing China's diversification of trade and exports globally. Having said that, though, it is still a very important chunk of China's export to the United States. And by the way, China has been building its economy and opening up policy while looking at its relationship with the United States getting ever better over the past decades. But now, what are the tools in China's toolbox that would help this country to transform its economy, to go through this relatively challenging period of time? In the immediate term, some talk about rate cuts, others talk about some local policies relating to the central policies as to how to encourage consumption. Tell me more as to whether these tools will work, to what extent can it be, and how efficiently these has to be rolled out, or we have to wait and see.
Yeah, we don't want to wait and see. We want to cut interest rate right now. So I think that's the reason why I think the market is looking for interest rate cut and also triple R cut in the second half of this month in April. And also the cut has to be very decisive and sizable. I think before this, the Chinese central bank has been cutting interest rates in 20 bits, 25 bips in one go. I think we should cut 100 basis points or even cut it straight to zero. In one go, and that way, people can see that
Well, there's a debate in the Chinese society, certainly, that's for sure about that.
Yeah, that's right.
That's
right.
Yeah, Joseph,
I'd like to add a couple of points. A lot of the growth that we saw over the last decade plus in China's export-led growth came from private Chinese enterprises and not from state-owned enterprises and not from foreign enterprises that had invested in China. So who we see most vulnerable to these types of tariff increases from the U.S. are, in fact, Chinese private enterprises. And so I think here, where we see the government reaching out to private enterprises, we see efforts to develop policies to protect and to help those enterprises survive this moment, but also find their footing post-pandemic, is something I think that's clearly a step in the right direction. And it follows the desire to find a better relationship between private and public-owned enterprises. But here's another point that I'd like to say, which is I've been studying the Chinese political system for more than 2 decades. Prior to that, I worked in the U.S. government and at different levels, and I've long been thinking about these two things, these two sides of the coin. And one of the things that we have to that I find in my research, and I think a lot of other scholars have come to the same conclusion, whether domestic or internationally, which is the Chinese political system was built to confront crises. It's something that is highly adaptive. It's very capable of solving much bigger problems than the one that it currently faces, given the challenges that were imposed on it previously by foreign aggression and then the need to rapidly develop. So I think the biggest thing that China has in its toolbox is its capacity to organize and meet big challenges like this politically. And I think this is where we'll see people really banking their confidence.
And by the way, Joseph, we see ever more active diplomacy and interactions between China and its neighbors and beyond, especially among the global South countries, on how to deal with not only just the latest tariff, but overall the real changing picture of the world. How much do you see is really coming out of it, inspirations as to help these economies to navigate together?
Well, I think that, a lot of the countries, they are, especially the countries in the global South, they understand fundamentally that they have a number of things in common with China. As countries in the global South, they are all more vulnerable to climate change than countries in the global North. And China right now is the global leader in green innovation and development, and they need access to those products and services in order to help them survive the coming onslaught. At the same time, China has demonstrated that there is an alternative path to modernization, one that may offer these countries alternatives, especially when we start building in things like the Belt and Road Initiative, where they can move past these old paradigms that have been imposed on them by the IMF, by the World Bank, by the United States, by the European capital markets, that had left them stuck in these chronic stages of underdevelopment. So they see in China a country that is stable, that is committed to a principles-based foreign policy, multilateralism, and they see a partner that they can work with. At least, even if they don't have utmost confidence in China, they understand that China offers them a better opportunity for growth, at least, than the U.S. does, or even Europe.
Right. How? A question for you as an economist. We understand the U.S. Government has been talking about to come and invest in our country, build a factory here, employ people, get the economy up. But we also see the latest a series of demonstrations going on in different cities across the United States called the Hands Off campaign. And we are also seeing global companies reluctant to invest, whether it is in the United States or elsewhere, because of uncertainty. So how do you see, from an economist perspective, what does it take to encourage others to invest, to build, and to have long-term profits together with the economies that are inviting them?
Yeah, well, I think for decades, China has been one of the major destinations for international capital flow all the way until late last year, right? So we saw a certain magnitude of capital outflow. But before that, China has been very successful attracting international capital. And I think that, one of the reasons why, China has been so successful was, the business environment has been good, right? So the regulation has been very light, and the prospect of making money in this economy is high, and therefore, capital flowing into China to build business from all around the world, and also help the Chinese economic development along the way. I think going forward, one of the most important things is, trying to reinstitute confidence in the business community, and also, invite and improve better understanding of the Chinese economy, and how China is handling this economy going forward. And I think right now, the Chinese government has rolled out a lot of initiatives, for foreigners to come to China. For example, the visa waiver program for many of the countries, and also, the relaxation of foreigners doing business in China, and also, opening personal account, banking account, mobile phones, for example. All of these are sort of a convenience to help them set up their offices and families in China. So I think things are still, sort of progressing. We're sort of halfway through to rebuild, and I think hopefully towards in the very near future, I think people come to China more and understand the Chinese economy better.
So, what are your final suggestions, gentlemen, for constituencies, communities, and businesses amid all the moving factors? How?
Yeah, well, I think China is a great place to set up your business and make money here. And I think for living in China for so many years, and one get to learn and prosper in the system. And I think the environment hasn't changed. I think the market volatility will pass very soon, and after that, you would have a really great starting point to set up a good business and make money in China.
I think that only by being strong and resolute while cooperating with others will the U.S. be forced to back down, and then we'll see an inflection point where win-win solutions are possible between countries that are currently experiencing a lot of uncertainty. I think we'll see a new opening for globalization and human progress.
Joseph Gregory Mahoney, Hong Hao, thank you so much, gentlemen, for your insights and your analysis. Appreciate it. And that's all the time we have for today. If you'd like to know more, search World Insight. Check out our YouTube channel. Follow us on X and Facebook. I'm Tian Wei on behalf of the team. Thanks for being with us. Bye for now. I'll see you tomorrow.